Well, let's move on and discuss the other stocks that are on the news today. Hemang Jani, a retail equity strategist at Motilal Oswal Financial Services, joins us on the show. Hi, Hemang. Morning. Thanks so much for joining in. Well, we have a pharma deal that was announced yesterday post-market close. IPCA is going to be going and buying out the residual business of Unichem. For Unichem, I guess for those shareholders, given the open offer, the price, etc., it will be positive. But for IPCA, the read-through is a little bit negative. Your view on both these two stocks and on the deal?
Yeah, good morning, Nigel. I think, at this point of time, it's not very clear to us as to what was the rationale for IPCA to go out and, acquire Unichem. One possible reason could be that, they have some sort of import issues, from their existing domestic plants. And since this plant was available to them, which was US FDA approved, they could have probably acquired it, but typically it takes far too longer time to get that operational activity going on and start the business. So clearly, this could be a case of some sort of a misallocation of capital, and we think that this would be viewed negatively by the market. Anyway, IPCA had its own issues, because of this, import alert and the fact that there was a bit of a slowdown in terms of earnings. So we would rather go with some of the other, domestic-oriented companies, maybe something like Ajanta Pharma or Alchem Lab versus IPCA at this point of time.
Hemang, the other one is Crompton. If you want to come in, if you've seen the changes which have happened, again, there is a little bit of skepticism about the changes at the top and the person who's coming in. It's again, one of those names which has done very poorly. The high on Crompton was about 500 rupees. It's under 300 now. What's your sense?
So Prashant, we would really want to see how this entire transition pans out. Also, if you look at the numbers, Crompton, despite having a very strong brand and their intention to expand the category, the numbers have not been that great. So we're not in a hurry to kind of go out and buy any of these names unless we get a comfort on the numbers and the valuations both. We have many more options when it comes to the mid-cap and small-cap category. So at the moment, we would avoid that.
Okay. There's actually some very interesting trends in the mid-cap IT space, right? So while the large caps are sulking a bit, the earnings have been pretty good in mid-caps, whether it was Cyient, Mastech, and now even Persistent Systems. Would you buy any of these names or anything else that you like here?
So Sonia, yes, it has come surely as a silver lining for the IT sector, where we had some major disappointment from Infosys. TCS also was a bit subdued. So there has been some sort of positive rub-off across some of the smaller IT companies. But I think within the names that we discussed, I think Cyient is something that stands out, where we had a very strong beat. The valuation comfort is high. Persistent numbers have been good, but there is an issue of single client concentration, and a large part of the quarter-on-quarter growth is coming from IBM. So we have to exclude that and see how the growth would look like. So I think, yes, some of the mid-cap IT companies can do well. Cyient and Zensar are the names that we like at this point of time.
All right. Hemang, normally we see either Ultratech Cement or we have, ACC Ambuja. They come out with their numbers first from the cement pack. This time around, Dalmia Bharat, they have turned things around. I think for the many, many years, I've never seen them report numbers first. What's your view on the cement space? I ask you this because input costs are cooling off. The problem is price increases are not happening. So what's your take?
So yes, I think because of the way the raw material prices have come off, some of these companies could report a better, margins. Also, we think that, somewhere as you see the capacity utilization improve, there is going to be some impact of the operating leverage. So we do like Ultratech in the large cap. We do like Dalmia and some of the other mid-cap companies like JK Cement. And we think that given the thrust of the government, the real estate sector, as we all can see from the commentary, they are looking quite upbeat. So I think cement as a sector should do well because of the combination of better growth outlook and raw material prices cooling off.
The other stock I wanted to ask you about was Maruti. I mean, we were just having this discussion, so it's kind of top of mind. But yesterday they announced prices for their new SUV, which is the entry-level SUV Fronx, and it's quite decent. I mean, it's a sub 8 lakh model that they're looking at. 7.46 lakhs is the starting price, and they're looking to get into this SUV space very aggressively now. Could that be the big trigger for Maruti this year, Hemang? And is the risk reward favorable for investors?
I do think that given the way the management has bounced back with the slew of launches in the compact SUV category and the kind of response that they have got, surely things are looking better. The numbers, monthly numbers, since you're closely tracking, I think Maruti has reported relatively better numbers, and we think that despite a very strong 2 years, this year again is going to be very good for passenger vehicle category, despite the competition that you see from Tata Motors and whole host of companies which are launching products. So I think Maruti by and large should do pretty well. The stock has actually practically has gone nowhere. So I think from a risk reward point of view, it is looking quite compelling to us.
By the way, Hemang, any thoughts on real estate? We had the management of Lodha yesterday with us in the morning, and they, what stood out was their confidence that this is just year 2 or 3 if what they see is a slightly longish real estate cycle. Longer than usual is what they put it as. And they said, well, there are 2 reasons. One is supply is consolidated with fewer players, and there is an uptick in demand, of course. What's your sense?
So Prashant, I heard that interview and I was a bit surprised that, they're talking about such a long cycle, of 10, 15 years. I don't think, any management would have that kind of visibility of 10 to 15 years. But I think what is important, Prashant, is that given the way the interest rates have moved up, and the fact that though the real estate numbers, sales numbers have been good, but we have to see the profitability and, versus expectations, how the numbers are panning out. So we are quite positive actually from a medium-term perspective. So Lodha, some of the Bangalore-based companies, having seen a correction and the fact that there's a repo rate, there's a pause and maybe interest rates could head down. I think those are definitely positive triggers. So we would have a positive view there.
Okay, all right, Hemang, just stay on. We have many more questions for you, but it's also almost 9 a.m. and we have to talk about the technicals of the market. So let's take a quick break.